In 2024, Bitcoin remains the most popular cryptocurrency, continuing to draw interest from individuals and institutions alike. Whether you're intrigued by its decentralized nature, the potential for substantial returns, or just eager to join the crypto revolution, buying Bitcoin can be a great investment opportunity. However, diving into the world of Bitcoin without the right knowledge can be risky. Scams, security threats, and complex technical jargon often intimidate new investors. If you're ready to take the plunge but unsure where to begin, don't worry. This guide will help you understand how to buy Bitcoin safely, avoid the common pitfalls, and become a smart investor. Let's get started on your journey to secure and informed Bitcoin ownership. Body number 1. Understand Bitcoin. What is Bitcoin? Before buying Bitcoin, it's essential to understand what you're investing in. Bitcoin is a decentralized digital currency created by an anonymous person or group under the pseudonym Satoshi Nakamoto in 2009. It operates on a peer-to-peer network, allowing users to send and receive transactions without the need for intermediaries like banks. Why Bitcoin is valuable? Bitcoin's value lies in its scarcity and decentralized nature. There will only ever be 21 million Bitcoins in existence, making it a deflationary asset. Bitcoin's independence from traditional financial systems, combined with its potential to act as a hedge against inflation, makes it a unique investment. Why people invest? Bitcoin's price history has been volatile, with significant peaks and valleys. While some see Bitcoin as a way to quickly grow wealth, others invest as part of a diversified portfolio, believing it could serve as digital gold in the long term. However, just like any investment, Bitcoin carries risks, so never invest more than you can afford to lose. Number 2. Set up a wallet. What is a Bitcoin wallet? A Bitcoin wallet is a digital tool that allows you to store, send, and receive Bitcoin. Your wallet doesn't store Bitcoin itself, but holds the private keys that give you access to your Bitcoin on the blockchain. Without these keys, you cannot control your funds. Different types of wallets. Hot wallets. These are online wallets that are connected to the internet, such as mobile or web-based wallets. They're convenient for everyday transactions but are more vulnerable to hacks. Cold wallets. These wallets are offline and considered safer for long-term storage. Cold wallets include hardware wallets like Ledger or Trezor and paper wallets, physical copies of private keys. Choosing the right wallet. When choosing a wallet, consider your usage. If you plan on trading frequently, a hot wallet might be more practical. However, if security is your main concern and you plan to hold Bitcoin for the long term, a cold wallet is your best option. Always choose wallets from reputable companies with a solid track record. Number 3. Choose a reliable exchange. What is a Bitcoin exchange? A Bitcoin exchange is a platform where you can buy, sell, and trade Bitcoin. Essentially, it acts as a marketplace that connects buyers and sellers. Each exchange has different features, fees, and security measures, so choosing the right one is critical to your safety. Top exchanges in 2024. Here are some of the most trusted cryptocurrency exchanges. Coinbase, known for being user-friendly, especially for beginners. It offers strong security measures but can charge higher fees compared to other platforms. Binance, one of the largest cryptocurrency exchanges by trading volume. Binance is suitable for both beginners and advanced users, offering various features like staking and futures trading. Kraken, known for its security and lower fees, Kraken is often recommended for investors who prioritize safety. Gemini, a highly regulated exchange based in the US, Gemini is a solid option for those who want a trusted and secure platform. What to consider when choosing an exchange? Security. Research the exchange's history of hacks or security breaches. Check if it offers two-factor authentication, 2FA, and whether it stores a significant portion of funds in cold wallets. Fees. Each exchange has different fee structures. Some charge a percentage of each transaction, while others have flat fees. Be sure to compare fees across exchanges. Regulation. Ensure the exchange complies with local laws and regulations, particularly if you live in a country with strict financial rules. Liquidity. Choose an exchange with high liquidity, which will allow you to buy and sell Bitcoin quickly without significant price fluctuations. Number 4. Verify your identity. Why identity verification is important. Many reputable exchanges require identity verification as part of their Know Your Customer (KYC) process. KYC is a regulatory requirement in many countries aimed at preventing illegal activities such as money laundering and fraud. Steps in the KYC process. To complete the verification process, you'll need to upload a government-issued ID. This could be a passport, driver's license, or national identity card. Provide proof of address. Some exchanges might ask for a utility bill, bank statement, or other documents to confirm your address. Selfie or video verification. In some cases, exchanges may request a live selfie or video as an additional security measure. How long does it take? Verification times can vary depending on the exchange. Some platforms process verification within a few minutes, while others may take several days. Be patient, as this step is crucial for securing your account. Number 5. Deposit funds. How to fund your account. Before you can purchase Bitcoin, you'll need to deposit funds into your exchange account. Exchanges typically offer multiple funding options, including bank transfers. Direct bank transfers are one of the most common ways to fund an account, though they may take a few days to process. Credit or debit card. Some exchanges allow you to buy Bitcoin directly with your card. While this method is faster, it often comes with higher fees. Cryptocurrency deposits. If you already own another cryptocurrency, you can transfer it to the exchange and trade it for Bitcoin. Payment method. Considerations, fees, and processing times. Different payment methods come with varying fees and processing times. Bank transfers often have lower fees but may take longer to complete, while credit card transactions are instant but more expensive. Deposit limits. Be aware of any deposit limits imposed by the exchange. Some platforms set daily, weekly, or monthly limits on how much you can deposit, depending on your verification level. Number 6. Place your order. Different order types. Once your account is funded, you can place an order to buy Bitcoin. There are several types of orders available. Market order. This allows you to buy Bitcoin at the current market price. It's the simplest and fastest way to make a purchase. Limit order. With a limit order, you set the price at which you want to buy Bitcoin. The order is only executed if the market reaches your target price. Stop order. A stop order allows you to automatically buy Bitcoin if the price moves above a certain level, helping you capitalize on upward momentum. How much Bitcoin should you buy? If you're new to Bitcoin, start small. Even if you have a lot of capital to invest, it's wise to begin with an amount you're comfortable losing, as the crypto market is known for its volatility. Once you're familiar with how the process works, you can buy more. Dollar cost averaging. A popular strategy for buying Bitcoin is dollar cost averaging, where you invest a fixed amount of money at regular intervals, regardless of the price. This can help smooth out the effects of volatility and prevent emotional decision-making. Number 7. Transfer Bitcoin to a wallet. Why should you transfer Bitcoin? After buying Bitcoin on an exchange, many people leave it there, but that exposes you to unnecessary risk. Exchanges are prime targets for hackers, and there have been instances where platforms were breached, resulting in the loss of user funds. To avoid this, transfer your Bitcoin to a personal wallet where you control the private keys. How to transfer Bitcoin. Step 1. Obtain your wallet address. This is a long string of alphanumeric characters that represents your wallet. Step 2. Go to the withdrawal section of the exchange and enter your wallet address. Step 3. Double-check the address to ensure it's correct. Bitcoin transactions are irreversible, so if you send it to the wrong address, you won't be able to recover it. Step 4. Confirm the transaction and wait for the blockchain to process it. This can take a few minutes to an hour, depending on network congestion. Transaction fees. Transferring Bitcoin out of an exchange usually comes with a network fee. The fee fluctuates based on network activity, so you may want to check the fee before initiating the transfer. Number 8. Keep your Bitcoin secure. Why security is crucial. Once you've transferred your Bitcoin to a personal wallet, security becomes your responsibility. Unlike traditional banks, there's no central authority that can help recover your funds if they're lost or stolen. Therefore, protecting your wallet is of utmost importance. Security best practices: enable two-factor authentication, 2FA, ***. Always use 2FA on your exchange and wallet accounts to add an extra layer of protection. Never share your private keys. Your private keys are the only way to access your Bitcoin. Keep them safe and never share them with anyone, no matter how legitimate the request seems. Use a hardware wallet. If you're holding a significant amount of Bitcoin, a hardware wallet provides the best security. Hardware wallets store your private keys offline, making them virtually immune to hacks. Backing up your wallet. Whether you use a software or use a hardware wallet, it's essential to back up your wallet regularly. Most wallets provide a recovery seed, which is a sequence of words that can be used to restore your wallet in case of device loss or damage. Write down your recovery seed and store it in a safe place, ideally in multiple secure locations. Never store your seed phrase online or in a digital format. Number 9. Avoid common scams. Recognizing crypto scams. As the popularity of Bitcoin grows, so does the number of scams aimed at stealing your funds. Newcomers to the crypto space are often targeted by schemes that promise guaranteed returns, fake giveaways, or fraudulent exchanges. Familiarizing yourself with these scams is critical to protecting your Bitcoin. Types of Bitcoin scams to avoid phishing. Scammers impersonate legitimate services, such as exchanges or wallet providers, to trick you into sharing your private keys or login credentials. Always double-check the URL and ensure you're using official platforms. Ponzi schemes. These scams promise high returns with little or no risk. In reality, they rely on new investments to pay off earlier investors. Avoid any service that guarantees returns, as no investment, especially in crypto, can be risk-free. Fake exchanges. Some scammers set up websites that look like legitimate exchanges but are designed to steal your money. Only use well-known, regulated exchanges. Impersonation scams. Scammers pretend to be celebrities, influencers, or even tech support, offering free Bitcoin in exchange for an initial deposit. Remember, no one will give away free Bitcoin, especially if they ask for money first. Staying vigilant. Always be skeptical of unsolicited offers or anything that seems too good to be true. Scammers use fear, urgency, and greed to trick you into making mistakes. Stay calm, research everything, and never rush into decisions involving your Bitcoin. Number 10. Monitor your investment. Why tracking your Bitcoin matters. After buying Bitcoin, it's essential to keep track of your investment. Bitcoin's price can fluctuate significantly, so knowing when to buy or sell could affect your overall returns. Whether you're a short-term trader or a long-term investor, monitoring your holdings is crucial to success. Tools for tracking Bitcoin mobile apps. Many apps allow you to track the price of Bitcoin in real time. Some of the best include CoinMarketCap, Blockfolio, and CoinGecko. These apps provide price charts, market data, and portfolio tracking features. Price alerts. Set up alerts on exchanges or through mobile apps to notify you when Bitcoin reaches a specific price. This can help you stay informed without constantly monitoring the market. Tax implications. Keep in mind that in many countries, buying and selling Bitcoin has tax implications. Be sure to track your trades and consult a tax professional if necessary. When to sell Bitcoin? Knowing when to sell Bitcoin can be challenging. Some investors take profits when the price reaches a specific target, while others hold for the long term, expecting further appreciation. It's essential to have a plan in place and not make emotional decisions based on short-term price movements. Buying Bitcoin safely requires understanding the process, choosing the right tools, and being vigilant against potential risks. With this guide, you're now equipped to make informed decisions and navigate the world of cryptocurrency with confidence. Remember, always prioritize security, avoid scams, and monitor your investment to ensure a smooth Bitcoin experience. As Bitcoin continues to grow, becoming a well-informed investor will help you maximize your opportunities while minimizing risks. We hope you find this video helpful. Kindly hit the like, share, and subscribe button to see more of our upcoming videos. Happy investing, and may your Bitcoin journey be both profitable and secure. Bye.